Cities on the air, and with me on the phone now is Adam Schuster from the Illinois Policy Institute. How are you today, Adam?
I'm doing great. Thanks for having me back on the show.
Yeah, happy to have you on the show because one of the issues that you follow, I know the Illinois Policy Institute following a number of different issues within the state, but you've been keeping a close eye on the fair tax proposal for the upcoming election.
That's right, and most recently we've been keeping an eye on the actual official mailer, the explainer of the so-called fair tax sent out by the state of Illinois to the voters, which is supposed to inform them about the ballot measure ahead of the vote in November, but unfortunately contains several misleading statements and some outright factual errors.
I've talked to a number of people who, I myself live in Illinois, and talked to a number of people who are confused by what's happening with the tax. Would it be a logical starting point to kind of explain what the proposal is before we get into the wording of how this is being represented? Can you maybe just kind of give us a little synopsis of what the so-called fair tax proposal is all about in Illinois?
Sure, happy to do so. So this is the first time since the 1970 Constitution, so since voters first approved the Constitution, that they'll have the opportunity to directly vote on how much they should be taxed by the state. So not in 50 years have Illinoisans had an opportunity to vote directly on taxation. And what they're being asked to vote on is eliminating what's sometimes called the flat tax, or the proportional rate guarantee from the Illinois Constitution that was put in place in 1970, intended as a protection for taxpayers, and to replace that with what Governor Pritzker calls a fair tax system, what you might more neutrally call a progressive tax system, which allows for the state to charge different income rates to different groups of taxpayers.
And when you were on the show with me before, I asked a pretty specific question. The answer that you gave, I think, pretty well summarized what the issue is. And the question was basically, if this passes, it's passed under the premise that it's fair for everybody. And this is, we're going from a flat tax of, 3.5% to a tax that the people who earn more money will have to pay more. But the question that I asked you was whether or not, after it's passed, does that then give lawmakers the option to change how much everybody is taxed?
Yes, and that really is the crux of the issue here. So lawmakers are asking you to vote on changing the Constitution, but they are not actually asking you to vote on a specific set of rates. I say that because there is a statute, a bill that they passed, that would establish the rates if voters approve this plan, but those rates are not permanent. They are not themselves in the Constitution, and in fact, the constitutional amendment has no restrictions on how high the rates could go or who they could go higher on. So the concern is that, it's like Comcast's introductory rates when they try to get their foot in the door to get you to buy their cable services. It could change in 3 months with a simple majority vote, and the people won't have a second opportunity to have a say on this.
And so this is a constitutional issue, so it has to be on the ballot. But if it's passed, then it's just up to the lawmakers to decide from there.
That's right. And given the infamous financial mismanagement of Illinois, given the more than $200 billion in debt that the state has racked up, we know that a tax increase on those making more than $250,000 a year won't raise enough money to pay down all of their spending promises, let alone close all the debt and deficits. So we're worried that not only will this result in higher taxes on the middle class, and we've calculated what the rates would be on the middle class if Pritzker tried to fully fund his campaign spending promises. Now, you might say that he's not going to try to do that, but if he did, it would result in $3,500 in higher taxes for the middle class. But also, proponents of this plan have admitted that it's step one, and that it paves the way towards taxing retirement income in the state for the first time. And the reason for that is simple, is that this plan gives Springfield politicians additional powers that would allow them to divide and conquer taxpayers and makes it easier to raise taxes on everybody over time.
Should it be a red flag to people that Governor Pritzker, who he has a lot of money, and he's spending a lot of money towards this effort? I think last count it was $56 million to promote this. Is it a red flag that somebody who's rich would supposedly be pushing for a tax that wants to put more tax burden on other rich people?
I think it should be a red flag that the governor is spending $56 million of his own money pushing this tax hike idea. I think it should also be a red flag that throughout this, Governor Pritzker, Democrats in the General Assembly who support this idea, and now an official document from the state of Illinois are using misleading arguments to try to sell people on this plan. They can't sell it in honest terms, because if they did that, the voters would reject it. And so, if this plan was really about tax fairness, if Governor Pritzker wanted to make the Illinois tax system more fair, he would be focusing on reducing our second highest in the nation property taxes. He'd be focusing on rolling back some of the numerous tax and fee increases he put in place his first year, which are taking hundreds of dollars of more money from the working poor through higher gas taxes, through increased vehicle registration fees, higher online sales taxes, new taxes on car trade-ins. And when you're seeing that, the working poor and the middle class are already paying hundreds of dollars more in those taxes as property taxes continue to go up, and then on the other end, the initial rates under the fair tax offer, someone who's in the working poor making about $12,000 a year, a $6 income tax break. So they were just asked to pay hundreds of dollars more in these other taxes and fees, and they're being given $6 back on the other end. There's nothing fair about that. And if we want to make our tax system more fair, we can do it without raising taxes on anybody and without giving the Springfield politicians additional power to come after the middle class in the future.
Well, let's talk a little bit about the wording that you're talking about as far as the way this is being sold to the people of Illinois. We're talking with Adam Schuster with the Illinois Policy Institute, talking about the tax proposal in the state of Illinois, and some information that they've sent out. They claim that this amendment would make Illinois tax system fair.
Yeah, so exactly. If this was going to make Illinois' tax system more fair, then you'd be focusing on reducing the taxes that make our current tax burden so unfair. The fact that we have the second highest in the nation property taxes, one of the highest overall state and local tax burdens. But the reality is that Governor Pritzker's quote-unquote fair tax plan would leave someone in the bottom quintile of income earners. So the bottom income earners in Illinois would still be paying the second or third highest total tax burden in the nation after this plan. So this does nothing to make our taxes more fair. All it does is increase taxes on small businesses in the midst of a massive economic recession in which they need all the money they can to hire employees, to give employees raises, and to keep their business alive. And instead, we're being given the opportunity to hike their taxes.
What about the claim that this amendment does not tax retirement income?
So that's another one. It's misleading because the initial rates that they're using, like I said, this is a bait and switch proposal. So the initial rates do not start taxing retirement income, but people like Democratic Treasurer Michael Frericks, people like State Senator Daniel Biss, the Chicago Sun-Times editorial board, and a whole slew of proponents of this idea. So people who like this idea are out there admitting that it paves the way to taxing retirement income, that it makes it easier for lawmakers to start taxing retirement income. And that's because in the past, there's such strong public opposition to taxing retirement income. Polls show more than 75% of Illinoisans are against the idea. They've never been able to get that through before. But if they could divide and conquer, they could start by taxing retirement income of only above a certain level, say $100,000 a year, but then lower that to slowly capture more pension and Social Security income, and they've already tipped their hand that that's the plan.
This amendment will help small business owners. What about that one?
Perhaps the most bizarre and inaccurate statement in that entire guide. This tax plan would immediately raise taxes on more than 100,000 Illinois small businesses who pay their taxes as individuals through what's called pass-throughs, because they're organized as S corporations or partnerships. So 100,000 small businesses are going to see their taxes go up. It's going to kill 56,000 jobs. And remember, this is coming on the other end of the coronavirus pandemic and the related economic downturn, when businesses were ordered to shut for months. They were ordered to, operate at reduced capacity for the sake of the virus. And now, when they're trying to recover, we're talking about hiking their taxes. This is the exact wrong thing to do, and it's actually something that economists across a wide ideological spectrum agree on. And even, former President Barack Obama has said you don't hike taxes during or just after a recession.
And the last one, the federal government and most states use the graduated tax system.
That's right. So they like to point out that the federal government uses or allows for graduated rates, as do 32 states in the U.S. And they try to sell this point as if moving from a flat tax to a progressive tax would be modernizing our tax code. But what they don't tell you is, first of all, in 18 of those 32 states, fully half of those states, the maximum income tax rate hits the equivalent of Illinois' middle class. So somebody making around $79,000 a year for a family of four would be hit with the highest top rate. So when Governor Pritzker says, he doesn't think it's fair that he should be paying the same tax rate as a nurse or a social worker, in half of the states that have the tax plan he wants, he would be paying the same rate. And that's because, as we said before, the middle class is where the majority of taxable income is. And when politicians want to raise a lot of money to cover their spending and debt habits, they come to the middle class. And that's borne out not only, by the experience of states overall, but by the last state to switch was Connecticut in 1996. They made all the same promises, but middle-class taxes went up 13%. They still failed to balance their budget, and property taxes continue to rise.
Maybe he's planning to include a toilet removal clause in the taxes. If you're going to pay the same taxes as Pritzker, maybe you just take the toilets out of your house and save money that way.
Yeah, I don't know if anybody other than a billionaire would be able to get that deal.
Well, as a resident of Illinois and a taxpayer in Illinois, I'm grateful for the work that you do, and I appreciate your time on the show today.
Talk to you soon.
All right, there's Adam Schuster from the Illinois Policy Institute right here on AM Quad Cities on WOC News Talk 1420.